Welcome to The Explainer. You know that classic line from the movies, follow the money? Well, ever wonder how that actually works in the real world? Today, we're going to pull back the curtain on the world of anti-money laundering. We'll see how financial watchdogs can take just one little suspicious transaction and unravel a whole criminal investigation. Okay, so let's put you in the hot seat for a second. Imagine you're working in insurance. A client walks in, and they have a request that just, well, it feels a little off, right? Maybe it's nothing, totally innocent. But what if it's not? How do you tell the difference between a simple quirk and a genuine red flag? A red flag that could be one tiny piece of a much bigger, much more dangerous puzzle. I mean, that's the question people in the financial front lines have to ask themselves every single day. So, what are these pros actually trained to look for? I'll tell you this, it's almost never a briefcase full of cash, like you see in the movies. The real clues, they're way more subtle. Let's dive into some real-world examples, specifically from the insurance sector. Okay, now what's so interesting here is that, any one of these things on its own might not seem like a big deal. But when you start to see them together, they paint a pretty suspicious picture. I mean, really think about it. Why would you suddenly change the beneficiary of your policy to someone who has no connection to you at all? Or why pay a premium from some random person's bank account? And this last one is a big one. Who in their right mind cancels a policy for no good reason, knowing they're going to take a huge tax hit? See, these are the kinds of questions that make an investigator's ears perk up. All right, so our red flag goes up. Now what? Well, it's not like you can just pick up the phone and call some generic hotline. Nope, there's a very formal, very secure, and totally mandatory process for reporting this stuff. So, in a country like Belgium, all of these suspicious reports funnel into one central place. It's called the Financial Intelligence Processing Unit, or CTIF-CFI for short. You can think of it as like the nerve center for all financial intelligence in the country. And here's the key part. Every single one of these reports has to be filed using a specific digital tool called GoAML. And just to be clear, this isn't some polite suggestion. As of October 1st, 2024, GoAML is literally the only way to do it. The reason for this big shift to one single digital system? Well, it's all about making things more efficient and way more secure. It guarantees that every single tip, every single red flag flows into the exact same place to be analyzed. But, just filing a report isn't enough. It's kind of like that old saying, garbage in, garbage out. For a report to actually be useful, it has to be top-notch. Investigators can't work with just a vague, this feels weird kind of report. They need the real deal. Who is involved? Down to the last detail. Exactly what happened in the transaction, a solid justification for why it's suspicious, and, of course, all the paperwork to back. And a huge piece of that puzzle is figuring out who is really pulling the strings. This is where we get into the idea of the ultimate beneficial owner, or UBO. See, criminals are masters at hiding behind these super complicated corporate structures. A company that's owned by another company, which is owned by some offshore trust. It's their favorite trick. So, the investigator's job? It's basically to peel back all those layers, just like one of those Russian nesting dolls, until they find the actual person hiding at the very center. Okay, so spotting red flags and filing good reports, that's one side of the story. But now we get to the other side, actually investigating all this stuff. And let me tell you, the scale of this challenge, it is absolutely staggering. So to really get a sense of this, let's just look at the numbers. In a country like Belgium, you've got about 800,000. That's right, 800,000 different companies and entities that need some kind of financial monitoring. Okay, so that's a huge number. Now you're probably wondering, how big is the team that has to monitor all of that? Get ready for this. The answer is 12. Just 12 full-time investigators. No, that is not a typo, 12 people. So when you do the math, it's pretty sobering. It means that at best, this tiny team can only check about 0.12% of all those entities each year. Not even 1%. It's a tiny fraction. So, how in the world do they even begin to tackle that? Well, obviously they can't check everyone. It's just impossible. So they have to prioritize. They use what's called a risk-based approach. Basically, it means focusing all of their limited time and energy on the cases that look the most dangerous, the ones that pose the biggest threat. It's the classic needle in a haystack problem, and they're trying to find the sharpest needles first. And how do they figure out which ones are the riskiest? They're looking for patterns, for clues. They're asking questions like,
How complicated is this company's ownership? Are there shell companies involved that are based in known tax havens or other high-risk countries? Is the same person's name popping up over and over again as the owner of tons of different companies? Is the information they have on file even correct and up to date? These are the kinds of clues that help them point their magnifying glass in the right direction.
Okay, so what happens to the people who get caught? For anyone deliberately breaking these rules, or even just failing to do what they're supposed to, let's just say the consequences are pretty severe, and they're designed that way to be a major deterrent. And as you can see, we're talking about a whole range of penalties here. There are administrative fines, and then there are actual criminal charges. And depending on what rule was broken, the penalties can range from some really hefty fines, we're talking millions of euros here, all the way up to serious prison time. But maybe the single most powerful tool they have, and it's an immediate one, is the asset freeze. This is a big deal. When someone gets sanctioned, it's not just about getting a fine in the mail. Instantly, all of their funds and economic resources, we're talking bank accounts, properties, investments, the whole shebang, are frozen solid. Boom. Access completely cut off. But these really strict black and white rules can sometimes crash right into the gray, messy reality of real life. And this is where the system has to deal with the human factor. So check out this real-life scenario. There's a guy, we'll just call him Mr. Z. He gets put on the national sanctions list, and just like that, poof, all his assets are frozen. One of those assets is a life insurance policy he'd taken out to cover the mortgage on an apartment he owns. Well, that apartment is now considered a frozen economic resource. And to make it even more complicated, there's a tenant living there. The rent they were paying was going towards the mortgage, but guess what? Now that rent money is frozen too. So, now what do you do? Well, this is where the law actually has a bit of a human side. The system has these built-in exceptions. It says the Minister of Finance can actually authorize the release of some of those frozen funds, but only for what they call basic expenses. We're talking about things like rent, mortgage payments, the absolute necessities. It's basically the law acknowledging that, hey, even when you're enforcing strict sanctions, people still need to live. And we see the same kind of nuance in other places too. For example, take the sanctions against Russia. The general rule is pretty clear. An EU insurer can't provide insurance for a Russian company's aircraft. But there's an exception. An EU company that's operating in Russia, as long as it's not in the energy business, might get a special authorization to get that insurance. Why? Because the rules have to bend a little to deal with the complex realities on the ground. So what this all comes down to is that fighting financial crime, it's just not a simple case of black and white. It's this constant, really delicate balancing act between having super robust security on one hand and dealing with fundamental human needs on the other. And that leaves us with a really big question to think about. In this incredibly complex, global financial system we've built, how do we strike the right balance? It's something to think about. Thanks for joining us on The Explainer.